Hey there, thanks for joining us for another Financial Tip Friday. My name's Scott Marks. I'm a financial advisor in our Scottsdale office. And today I'd like to talk about a few reasons why it makes sense in some cases to refinance your mortgage. So today we're going to go through 3 reasons. We'll go from the best reason to the worst reason. And if you still have questions after we're done with this video, please feel free to reach out to one of us here at the office. Reason number 1 to refinance your mortgage would be to lower your interest rate. That's just a net savings right there. If you have a 6% interest rate and you refinance that mortgage at a 5% interest rate, of course you're saving quite a bit of interest on that. The other reason, especially right now, one of the things that's gotten really popular is called the adjustable rate mortgage. And those lock in a rate for a few years at the beginning. And then after that 5 or 7 year period, sometimes 10-year period, it resets to a variable rate going forward. And that can be dangerous right now in this interest rate environment, especially with rates as high as they are. It makes sense for us to consider locking in a lower interest rate when we have that opportunity. The second reason that we would consider refinancing our mortgage would be shortening the term. So the most common mortgage, a lot of folks will get a 30-year mortgage, and that's a long time. So if you'd like to have your mortgage paid off prior to retirement, you do have the option to refinance that at a 20, 15, or even a 10-year mortgage. Now, it still only makes sense to do that if you're going to lower your interest rate or keep it the same in the process. Typically, interest rates are lower for shorter termed mortgages. However, if you've received a mortgage in the last year or so, chances are you're not likely to lower your interest rate by too much doing that. And the third and final reason, and I would say this is the worst reason, but also a valid reason, is to refinance and consolidate consumer debt. So if you find yourself in trouble with credit cards or student loans or interest rates on any of the debt that's over 8 or 10%, in a lot of cases it makes sense to bite the bullet and refinance your mortgage to consolidate that debt. Now, I'm not going to suggest that that's a long-term fix to the problem, because at that point we probably need to talk about spending a little less or getting control of our budget. But if it's going to allow you to go and pay down that consumer debt a lot faster and avoid the ending black hole of interest rates in the 20% for credit cards, that can be a good and wise decision for you to go and consolidate that and get your budget in order so you can pay it off over time. Well, thanks again. Again, this is Scott Marks over in Scottsdale. Thanks for joining us for another Financial Tip Friday. We'll see you next week.